Crypto is absolutely ripping today. Risk on assets doing pretty good. We may see some cooling in the job market. Is the Fed getting what it wants? Is this a trap? I don't know. Kevin's going to tell me why I don't know what I'm talking about. We'll be discussing that and much more today on Money Never Sleeps. The super cycle has begun, ladies and gentlemen. Welcome back to Money Never Sleeps. If I keep saying that a few more times, Kevin's going to have an aneurysm. Before he does, do us a favor, hit that like button, subscribe to the channel down below. Nothing that Kevin or I say is financial advice. Please do your own research for making any buys or sells. Kev, we got some jobs data today. The JOLTS report previous month was revised lower. This month, job openings came in significantly below expectations. Is this a sign of a cooling jobs market like the Fed wants? I think it could be. I know that you disagree with that, but I'm curious how you're feeling today as we see Bitcoin, briefly touch 44K. Bitcoin dominance is almost back to 55. The dollar is up on the day. Equities are recovering a little bit. What has your attention beside, obviously crypto is on your mind at the moment, but I know a lot of other things are too.
Yeah. I mean, crypto's on my mind. I'm looking at Bitcoin. I have no exposure to crypto whatsoever other than shorting Kathy Wood to fucking Kingdom Come. That's the only, position I have in the entire market. But when I'm looking at these Bitcoin prices in, the past few days, we'll take a look at it when we look at the charts, but just nonstop green, right? And it's a very dangerous place here because if we look at my friend before the show, he just sent me the tweet. He said that Bitcoin on the RSI is at 83. Like historically, that's just very hard to see. And we see that on the stochastic RSI that we're completely overbought. We're at 100 and 100 on that. So
on the daily, that's crazy.
Yeah, it's a very dangerous place here. And again, we know that the monthly's overbought. We know that the weekly's overbought. I don't know. I think that we're
weekly is 100, 100, and monthly is 189.9.
I think that this is going to be I'm a fucking genius at Christmas, Christmas morning. And then come January 1st, we start to see some cracks in the system.
I just want you to know the true meaning of Christmas is to be able to use your family as exit liquidity. Okay. That is why we get together with our families for the holidays. So we can tell grandma and grandpa to put their social security into Bitcoin so that we can then sell Bitcoin and use them as exit liquidity. That is what we do here.
Speaking of exit liquidity, we are getting even word of possible margin calls from clearinghouses. These are pretty much since 2008, we had tons of, regulation that pretty much allowed any trades or any money flowing through clearinghouses to be the pretty much way things are distributed because of everything that happened with, Bear Stearns, Lehman Brothers. We didn't want anyone who had any of these trades that were going through those specific investment banks to, go under because of that. We're seeing that there are significant risks to clearinghouses that have over $1 trillion worth of liquidity and liquid assets, and you kind of want them to be trading in treasuries and distributing it that way. But the thing that's really scary about it is that it's probably going to impact margin calls for a lot of people who are trading and have their liquidity and their assets flowing through these clearinghouses, because if that's the case, that means they're going to have to up their margin costs, and there's a good chance we could see a fire sale on some assets if things get crazy. But it's still a warning that I saw that's we should keep an eye on, because I think it does really play into what's going on with Bitcoin and also what's happening in TradFi right now. There's a lot of money flowing around in crypto. I'll say money, because obviously stable coins are money in this market, but it's really interesting to see that there are concerns of a liquidity crisis. And we could even take a look at China in a little bit and Japan and look at their stock markets, because there's going to be a mad dash for liquidity. I think that's going to be the most important thing in 2024. But right now, everything just moon fucking to Pluto, past the moon. Milky Way, adios.
We're heading straight to Uranus. All right. Let's talk a little bit about the jobs data from earlier today. Yeah. So I'm going to pull up the numbers, but we did see a sharp decline in the number of available jobs, below 9 million for the first time in a couple years. And we also saw previous readings get revised down. So we're at 8.7 million job openings. Median forecast was 9.4. So a big drop there. We are also seeing in that report that the quits rate is down. So people less people see opportunities to quit their job and find higher paying ones elsewhere. That is something that the Fed likes. Also seeing that the number of people getting fired is going down. So I would say, this one report is great. And I think it does make the Fed confident that they are heading in the right direction. The unemployment report on Friday, next Tuesday's CPI reading are also going to be very crucial. But I don't know, man. It gives me reason to believe that we might be going in the right direction. I'm not, by no means am I like rushing out to buy stuff right now. I'm still sitting here just enjoying the ride up, hoping for the best, but planning for the potential for that, that big fall off we've discussed after the Fed inevitably pivots, and using that as my opportunity to put more money into the market.
I think I have a different opinion on what that data comes out as. I also think that there's also going to be a lot more revisions moving forward for what we're getting. Obviously, second revisions will be really important to see too. But pretty much the Fed was operating on data that was inaccurate for the past 2-3 months. How many revisions that we did get? That's really interesting. It's significant changes that we saw in the revisions too. So I think that's something we have to keep in mind. And we did see a lot of job openings decrease. It was below expectations. That's not necessarily a great thing, right? I think that's also front running for maybe some of these companies that are pretty much saying, hey, we haven't seen that much growth in 2023 in terms of revenue. Let's take our foot off the gas here. Let's work with what we have. Let's not, continue to add on regardless of what everything in the markets are saying. I think that we are probably getting a lot closer. And again, I think that's a huge drop in the job openings. Once we get more data this week, we'll get a better idea of it. But I think that we are seeing the fact that the Fed might have over tightened. That's my, opinion of what we're seeing. I think they tightened too fast, too quick, and maybe, inflation did actually come down faster than we anticipated. And that could be for lack of demand. We could also say that the banks also tightened their lending standards too quick, not allowing a lot of money supply to continue staying in the system. But I think that's kind of where we are right now. I think that we are heading towards a hard landing. I think this is kind of pointing towards that. We want to see the unemployment data. That's the most important thing. And I think Friday is going to give us clarity moving forward. But in terms of unemployment, where we start to really see it pick up, probably after the beginning of the year. I would assess that January and February readings would probably be a lot different than what we're probably going to get this Friday.
Yeah, I'm looking at the expectations for Friday. The median estimate is 190,000 jobs added and an unemployment rate to stay steady at 3.9%. I wouldn't be shocked. I wouldn't be shocked if it hit, if it went above 4 on this one. And yeah, hourly wages expected to go up about 0.3%. So nothing too crazy there. Okay. We don't need to go too nuts today. I do want to look at some of the charts and see where you think there's, opportunities or concern at the moment. I know you also want to discuss liquidations when it comes to crypto, because that is quite important moving forward for the shorter term price action. So dealer's choice, let's start, actually, not dealer's choice. Let's start with liquidations and then let's get into the charts, shall we?
All right, let me pull up CoinGlass real quick. I didn't look at CoinGlass for the past few days, but I'm looking at the funding rates and the liquidation levels of everything that we're seeing with the recent moves up, and we're actually seeing a lot of liquidations in terms of Bitcoin. That should be no surprise, right? I think where we are in this market is we want to exhaust the bears as much as we possibly can. And I mean, not me, I'm a bear, but market makers in general really want to exhaust the bears to the point where there's no liquidations to the north of here. If we can look here, it's kind of hard to see, but we're seeing at this corner right here where I'm highlighting 24 hours, the wrecked level, as they say, is $260 million worth of liquidations across all of crypto. That's a massive amount, right? Especially when we're not seeing anything crazy happen necessarily, right? We're seeing in the FTX days, I think it was like about 500 million or so. It was like $500 million right around that time. We're seeing mass liquidations, but we're seeing, half of that, which is still a really good number. We're seeing that $100 million worth of it is on Bitcoin. No surprise there. We're also seeing, some of the others get some liquidations, but primarily it's Bitcoin that's liquidated the most compared to any other asset. If you look at this on the exchange side, Binance has just short of $100 million worth of liquidations. OKX pretty close right behind it, 87.59. I think OKX is also picking up a bit here because we do know that the volumes on Binance have decreased significantly since everything that's happened with CZ. So I wouldn't be surprised if those are roughly around the same. See that Bybit and Huobi, roughly about 33 million or so in that regard. But yeah, I mean, we saw a massive liquidation around about 4 hours ago, $115 million in the past 4 hours. It's huge. We look at 12 hours, 157 million. These aren't necessarily the greatest numbers of liquidations, as they are pretty much long liquidations at this point. I do want to pull up this now. This is our exchange liquidation map. This is on, I believe, this is across all the exchanges here for Bitcoin. I'm going to look at this one. This is the 1 day. We're seeing where all the liquidations lie. We're currently right here at this red line at about 43.7, so 43,700. You can see that there is some liquidity down here. There's also mass liquidity over here. If we look at this on the 30-day, I think it gets really interesting. There's not a ton of liquidity north of here. And I do think that this lines up with the idea that they're trying to exhaust bears to the point that they just don't have any short positions and everyone goes fucking long. And the reason I say that is because if we go all the way over here to the lowest part on this chart, it doesn't go any further, unfortunately. You can see that at 34,976, the cumulative long liquidation leverage is $9.7 billion. That's a huge amount. I mean, it's 9.7 billion. That's not that it's all going to get liquidated. Obviously, people are going to close their positions if it gets too close, their stop loss and stuff like that. But these are a lot of people who are just absolutely longing the market. And we could see that there's not too many more shorts north of here. So do I think a lot of people are going to start shorting here? It's possible. We can keep pushing up higher. I think that's kind of the game that we're in at right now. We're still seeing volume extremely low. So that tells me that more people are on the side of futures, perps, than they are necessarily on the side of spot, buying Bitcoin. And that's just complicating things a lot more because that means that people are just able to liquidate you. They know where your levels are. And, you're going to get hurt more buying futures or going short on futures as you would be just buying spot or, buying and selling spot for Bitcoin. So it's a really dangerous game they were playing. Let's take a look at the funding rate real quick too for crypto. This is where it gets really interesting. I mean, guys, it's just max fucking long here. You're seeing all this orange and all this red. Those aren't good. White is also pretty neutral. I mean, it means they're long, but it means they're neutral. And then if we see, a few here in between, those are the shorts. And, we could see squeezes and whenever we see those green ones, but not necessarily. I don't think those are the coins that are going to have, a lot of strength against Bitcoin right now because Bitcoin went to 55% for Bitcoin dominance this morning. It's absolutely insane. Like we haven't seen that since April 2021, which was the bull market drop that led to, I believe, the alts rallying a little bit right towards the end of April. So where we are right now, everyone is pretty much long across the board. Like I said, there's not too many shorts that are currently out there. We've got a few, but for the most part, this is kind of concerning here. OKX is doing a little bit more shorting than the rest of the market. Binance is just max long, which are we fucking surprised that Binance is max long at this point? No, not at all. They've been max long since the beginning of January. But if we take a look at the other exchanges and everything like that, I mean, it's pretty much in line with what's going on with Binance as well. So it's really interesting to see this. This is, we should probably pull this up more. It's my bad for not bringing this up more, but it kind of shows you where people are positioned. I want to see if more shorts come in. If more shorts come in, then obviously the price is probably going to go up. They're going to go after them. If there's more longs that come in here, that you're just building liquidity to the downside, and that might be one fast swoop that they just take out a good chunk, and then they got $5 billion or so worth of liquidations in, say, a week or so. So it's gonna be really interesting to see how that plays out. But yeah, I mean, it's kind of violent out there if you're a bear right now in the crypto space. Definitely not safe. That's kind of why I close all my positions. I wouldn't be surprised if it does run up a little bit more.
All right. So there's our latest on funding rates and liquidations. Let's look at some of the charts as well. I kind of want to look at it historically too, because we see, we mentioned earlier on that everything is really, really overbought. And at the same time, we can also see that can stay the case for months. So yeah. This is where, trading can be tough and why I am not a good trader. So I stay in my lane and I'm more of a long-term holder. And I DCA at times and I add to my positions when we drop, buying Bitcoin at 19.5K in the summer of 2022 is feeling pretty good at the moment. But where, I'm curious looking at some of these historical levels for Bitcoin on like the longer time frame, the monthly, we're seeing this huge move up. And some people will point to, the magnitude of a move that we saw in October of, from October of 2020 up until March of 2021 and say this is the start of something similar to that. I don't know if I buy it, but people will be saying it. So I just want to like kind of look at it and see where we, think that this move could really go to.
Definitely. And, man, it's really hard like to say that this move isn't retail driven because of the ETF. It's kind of the easy way. I think a lot of people are kind of justifying what's happened here. And this move here is probably the most retail invested move I've seen all year in terms of Bitcoin. I don't necessarily think that they've pushed it up fucking this much in such a short period of time, right? From where were we, 38 to currently just shy of 44K. I think they added to it, but they weren't necessarily the prime movers of this market. We explained it yesterday what's actually probably happening. But yeah, let's look at back where we are. I mean, obviously it's at 44K. Wasn't too long ago that we were at 69K. If you look at this in the chart, I mean, 2021, we're roughly 2 years ago from where we are currently. It's not that long of a time if we look at this historically, and we're right back at those levels. Not saying that we're going to go up this high. I really don't know how high we're going to go up. I think that we are getting to a point where we have to start using a little bit more logic as opposed to irrationality in this market. But if we look at back here, let's go to the weekly or the monthly. Let's do the monthly first, and then we see how many times Bitcoin's been extremely overbought. Well, it's been overbought right here back in, when it went to 64K. So it was at March of 2021. Yeah, March of 2021, April 2021. And that's where we saw the Bitcoin dominance actually tail off, obviously, with this move down. But we could see how overbought that Bitcoin was, 100, roughly right around where we are currently, a little bit more on the monthly we have. But we could see that this is how high it went. It was up at 64K and it was extremely overbought, right? That was the last time we've been in the overbought territory. I still consider this overbought. We haven't came down from it, so we're going to say that we're still overbought. The price was significantly higher. The volumes are, roughly a lot higher than where they are currently. I mean, they're about double the amount at this level as they were down here, if you're just looking at this visually. We saw more volumes when it started selling off like crazy. And we've made a good move to the upside from where we were down here to where we are. And obviously, the stochastic RSI in the monthly is telling us, yeah, you guys are still overbought. And we even came out of it and then we went right back up into it. Is there a good chance that we're going to see the strength of this move to up here when we've had this massive slow grind to build up to this level? I don't know. I think that this is something that we need to keep an eye on. But if I'm looking at this from just, say I'm not doing TA at all, and I'm just looking at this and trying to find historical patterns, I think that when we get this overbought, eventually it does turn. I mean, how many months we're overbought? Let's say from 100, 2, 3, 4, 5, I'd say 6 months or so that was in the overbought. Let's see where we are from here. Say 1, 2, 3, 4, 5, maybe one more month, 6 or so. We finish December up here. We could see another spike up and maybe we start to turn. But the thing is, even if it's oversold, we can still push up. I mean, look at this back in the blow off top that we got back in November 2021. So stochastic RSIs, yeah, they're important, but at the same time, I think there's a lot of other things that do play into effect with this. And again, I think macroeconomics is probably the best bet. If you look at this on here, we were overbought in this territory, and then we started coming to oversold on the weekly, and then we were all the way at the top. We got to overbought in the top here on the weekly, and then we've seen fluctuations and swings. But for where we are here, since the last time we were overbought, obviously is back in March 2023. I honestly think that if we hadn't had the USDT pump or any of that stuff, we probably wouldn't even have seen, I would say, low 30s at that point. I think there just wasn't the volume there to justify that move to the upside without stable coins pushing us up. Where we are currently, I mean, we're kind of at this resistance level where we were back in February 2022 when the market dropped and people got really excited. They started buying back. We went to 48K and then it kind of got toppy around that area. So could we be going to 48K? I think we're going to stay in this range. I don't know if we'll get to 50. I think where we are right now is very similar to February 22, if anything. Obviously, it would put us from 33K to 48K, and that's roughly where we pumped all the way to back in October to where we currently are right now, with about $4,000 or $5,000 more. So possibly to go in the tank. So when I look at this historically, yeah, I mean, there's a good chance that we could push up a little bit higher, but there's also a massive amount of resistance that we are seeing here. And let's not forget, again, the patterns that we are in. Eventually, this is going to die out. I think there's going to be a lot of steam that's lost. I don't necessarily buy the fact that this is the ETF pushing this price up like this. I mean, if we look at this on the daily, guys, this is just absolutely insane. 1, 2, 3, 4, 5, and the lowest percentage rate that we've pushed up in a single given day is 1.32%. You're telling me that's just absolutely insane that people are buying this much right now. And then we're also seeing the dollar and the gold go up too, which is really interesting. So I think there's a lot of divergences. I'm going off a little bit more than I kind of want to with Bitcoin, but I think it's worth taking a look at. I think it's very fishy, this price action, and I think that people are getting really excited over it. Let's just pull up the Bollinger Bands real quick.
I think it's worth just kind of not stressing about it in either direction, and because there's just too much right now. Like, yeah, I want to come on here and I want to give like some really great advice, but sometimes the best advice is to not do anything.
I agree.
And with all of the different indicators pulling in different directions, it's just like this is a market where I just don't. The less you do, the better. I think, like, that's just how I feel at this point. And I think that is what's going to serve the vast majority of people well right now.
Yeah, I think you're completely right. I think that the most important thing right now, and again, I'm saying this the entire bear market, but cash is really important right here, because then you kind of have options, right? I think that's probably your best bet, because say it's extremely overbought and you think that it's overbought, right? Well, if you have a long-term horizon and you are liquid, then maybe you have the opportunity to short that market. But if it does pull back and you think it's going to go up from there, well, then you have the cash on hand to buy some of the dip. So it's really interesting seeing things right now. I think you need to do the research now, not necessarily make a move in either direction. I'm not shorting this market one bit. I think it's a very dangerous market to be shorting anything right now, but it's just something to keep in mind, especially in crypto, that if we're looking at this historically, there's always going to be opportunities. You just kind of have to know when to get in and out. And I think right now, like you said, do less is probably the safest bet across the board, until we get some clarity of what's going on. But let's look at Bitcoin dominance, because this is the thing that really scares me. And I think that a lot of people aren't necessarily paying attention to. And that's probably why alts aren't necessarily doing as great as Bitcoin right now, right? I mean, alts are up a little bit. Fucking KuCoin is up like crazy today. Look at this. Hold on. Before we get to Bitcoin dominance, look at KuCoin today. Look at that. That's insane how much that's shot up. That's up 16% right now. 16% that KuCoin shot up in the single given day. Guys, these exchange tokens, there's something. Let's see if FTT is real quick. I'm sorry, I gotta do this, Jweb. This is no, I mean, that's wild. BNB is not doing anything. KuCoin, what are you guys doing? Did you guys get some more volume from all the Binance users that fled? No, they KYC too. But regardless, let's Bitcoin dominance. This is really interesting because Bitcoin dominance is at 55% now, 54.92 right now, but still, it shot up all the way. This hasn't been seen since, like I said, April of 2021. And everyone was saying that Bitcoin dominance was dead. And maybe this is something that they don't necessarily care about, but it's something that we should keep in the back of our minds, because we know that Bitcoin dominance affects the entire alt market, right? And if Bitcoin holds a majority percentage of the entire market, there's a good chance that if it does decide to dip, when it decides to dip, well, then everything else is going to bleed out, because, let's even take it like this. Let's look at ETH and BTC. They're trading pairs, right? I mean, ETH BTC is having a terrible day today. It's down 2.66%. It's just absolutely bleeding. If we look at, say, Matic to BTC, just to see how this is playing out, yeah, it's down 3.83% today. So all these trading pairs are absolutely getting killed by Bitcoin's dominance going up. And that's something that we might not see for a while until the USD pairs kind of catch up with that. But eventually they will. And then pretty much when Bitcoin dumps, it's just going to cause those to bleed even harder, because the dominance is so high. It might even drive Bitcoin's dominance up even significantly higher. We talked about if we regain 52, which was back when the XRP event happened, it was at below 50. If we would get 52, and then from 52 we go to 57. We're at 55 right now. I think we will get to 57 fairly soon. Even the possibility of going higher to 57, 60 or so. There's a good chance we can get in the 60s with Bitcoin dominance. It's going to be really interesting to see how this plays out. But crypto right now, very, very, very tread lightly. That's what I'm trying to say. I don't necessarily think that you should be making any crazy moves, but again, I'm not a financial advisor. For just the sake of this trade, we talked about this a year ago today. Look at it right there. It's Tuesday, December 23rd or December 5th, 2023. It's not at 30 cents, guys. I lost $100 to Jweb, so I will be sending him fiat because I think that's the safest asset right now. Take your victory lap, Jweb. I'll let you go.
I'm going to Vegas this weekend. I'll put it on black. Or give me a number and I'll put it on that number on the roulette wheel, and you can let me know.
How many numbers are there?
Oh fuck, I don't remember. Do you want me to do like on 00 to get the most ridiculous? Like we can just go that route. I don't know. I've never actually played roulette because it's like of all the games to gamble on, it's the dumbest outside of slots.
How many? Let me check. How many numbers are on a roulette wheel? Let's see. It says there's 38. Okay. Put it on 24.
24. Okay. I'll put that $100 on 24 when I get to Vegas.
I'm just kidding. That's your birthday money, man. Just have fun with that. But
I'll gladly take that $100. And who knows, maybe Matic will crash to 30 cents tomorrow, and I'll be able to put that $100 into Matic.
That would be my fucking luck, wouldn't it? Bitcoin dominance to 57, Matic to 30 cents. That'd be
the day after the bet closes.
I mean, I'm not complaining because then that means
listen, we all know the trend. I travel and crypto takes a fat shit. So be like batten down the hatches, people, because my flight leaves Thursday. So look out.
Yeah, man. It's again with altcoins, obviously they're at a pretty liquid level right now. I think there's a good chance if we do see Bitcoin dominance continue to rise and say Bitcoin does dump and dominance does rise, well then guess what? Everything else is going to bleed out significantly. But we thought that this was going to go to 30 cents and we got pretty close a few times, right? We got close right around here. I think this is August. Where's August? Oh, okay, so it'd be this one right here. This is the Evergrande dump where we dropped, 8.35% in a day. There's even more than that actually. And then we came down here back in September, and then we didn't get a chance to touch that at all. It got to 49.24, so that was the closest we got. Also, we know that there's been tons of stable coins that have helped out a lot, and maybe we were just a little bit too early, or maybe I was a little bit too early in this market to see us get to 30 cents. I don't think that that's a level that's not going to get breached. I think we are still going to hit 30 cents. I think it's even possible we could hit 20 cents. I think that we could be going a lot deeper than most people anticipate just based off liquidity. So that's just had to cover that with everything. Nothing too much more in crypto. Obviously, ETH has been it's at 22.74 once again. So it looks like it's getting at right where it was a few days ago. Could it push up a little bit higher? Actually, it did push up higher. I'm blind. 23.10. Wow. So that's seems like we found some resistance right there with this move down in February 2022. So interesting to see that. We're currently at 22.72, but nothing too crazy on that front. I think everything is pretty much Bitcoin, 4.11% today once again. So very interesting stuff on that front. Let's do something boring and then we'll wrap it up. Let's look at bond yields.
Ooh, fun.
Right across the board once again, guys. 3-month, whatever. That's a booger and a bigger I don't know. That's a little shitlet. That's a shitlet in a diaper. That's nothing. We're looking at the absolute diarrhea that is the 10 basis point drop for the 1 year. But yeah, I mean, this is it's even dropping it as we were talking right here. The 10 years, 11 basis points that it's down. The 7 years down 11 basis points.
You can have just like a bond yield section in TradingView, right? Like you can do that.
Yeah, I just don't like how it's like laid out and everything. So this is easier for me. But pretty much this is just showing you across the board. There's red. Okay. There's red across the board. And that tells me that people are flowing money into bonds. Again, they're taking advantage of
are running red with the blood of bond yields.
They're taking advantage of these yields, man, and they're not going to be there for long. And it's going to be something that I think a lot of the market's going to really regret because, those 5% yields, they're not going to be there. And if we look at this real quick, last thing. I'm not telling you to buy yields, but I'm telling you to take a look at them because the dollar is up again. I mean, it's overbought on the daily. It's going to be extremely overbought, and it's finding some resistance on the 200 and the 50 moving average here, but it's breaking out of this channel. I would like to see it's kind of trade sideways for a little bit, maybe kind of reset this, but if the yields are going up or the yields are dropping, that means that treasuries, people are buying them. Tells me that the dollar is probably going to have a lot of strength. We're looking at this right here. This is the euro. Euro's dropping off a cliff. We get a little bit of a bounce here. It's very possible. Also line up with their correction on DXY. That's probably needed. And after that, probably continuation further to the downside. Japanese yen, back and forth, back and forth. Looks like it's bouncing off here. This should rise, I think. Maybe we test this one more time, but to me, it looks like there's still strength. And then we didn't talk about this, but Moody's also downgraded China's outlook, not necessarily their credit, but their outlook from negative from stable. So they're now at a negative outlook here. We do know that they are printing money with stimulus. So it's going to be really interesting to see how the yuan reacts here. There's a bit of a gap. I could see that being filled. But it's going to be really interesting to see how the currencies play out because, again, gold is down once again. It's 2019, 2010 was the low that we got to recently. So it's really interesting to see how money's moving around the market. I think there is fear and uncertainty, and the bond market is definitely giving you signs to which direction the market's kind of positioning itself for 2024, in my opinion. That's why I'm not getting too euphoric with Bitcoin and all these other equities being up today.
All right. That is how we're going to do it. That's how we're going to wrap it up today. Appreciate everybody for joining us. If you have not yet, subscribe to the channel, drop a comment, share us out on social media. It'd be a nice little Christmas present for us if you would do so. We'll be back tomorrow a little bit early once again, go over the latest data, see what's happening in the markets. Until then, stay safe, everybody, and we'll see you next time.
Take care, everyone.